This is Heath Johnson from Spearfish, South Dakota. You are listening to the country's best religious radio that's not quite right from Doug Pagitt Radio.
Bow, meow, bow, bow. Isn't that fun? Heath Johnson made himself up a little bumper with some 70s funk vibe. Thanks, Heath, for doing such a nice thing. Welcome to Doug Pagitt Radio. Here with Victoria Lynn. And Victoria, I'm reading this book by a guy named Neil Borowski.
Oh, what book is it?
Does that sound interesting? A book by a guy named Neil Borowski.
What's it about?
It's called Bailout.
I don't pick books by the author's name.
You don't?
No. Like, Borowski. That sounds great.
Yeah. Well, it's called Bailout. And he is the fella whose job it was to be the inspector general over the TARP funds. Mm-hmm. So the TARP was the...
I heard about this.
Yeah, the Troubled Asset Relief Funds program. And what they did is they put together $700 billion to do three things. Right. Thing one, make sure the banks didn't collapse because the bankers ran bad bets or full of shenanigans, tomfoolery, and silly business. Yes. And they about buried our economy by their greed. Yep. Plain and simple. We live in a world in which, like the prophet Isaiah, people need to start saying, these clowns are unbelievable. Mm-hmm. The second thing they were supposed to do was to help people who were troubled in their mortgages. Mm-hmm. And the third thing was to take on foreclosures for the government and help work that out for the family. Mm-hmm. They only did one of the three things, the TARP funds. I don't know if you know this. They didn't even spend the money on the second and third things. No. All they did, because Timothy Geithner and Paulson and these guys, all they did was work really hard to protect the banks. Right. So they changed the rules 2 weeks after the TARP passed by Congress, and Congress was very explicit about three things needing to be done. Mm-hmm. They changed it, and they did what they called foaming the runway for the banks. This is clever. Oh, yes. They made it spa. They made it easier for the banks by giving them more time to put together their foreclosure process. So the program that was supposed to prevent foreclosure was instead used to give banks more time to hire more processors so they could foreclose, which continued the housing crisis. Yep. So this Neil Borowski, his job was to oversee that program. Mm-hmm. He's now done in that job. Mm-hmm. He was like the thorn in the flesh of all these guys. And he's written this book called Bailout, which tells about this.
Is it good?
It's good. And I want to tattle on these people because they're bad. Yes. I was in a conversation with somebody about all of this, and they were suggesting, hey, look, this is a great line. Look, sure, there were people in the industry who did some bad things, but the real problem, as this mythology goes, is people bought houses they couldn't afford. That's what created it. I mean, who thinks they could afford that house and they couldn't afford? Well, so Neil Borowski, before he was tapped to do this, he was working on fraud in the mortgage banking industry, like in 2007, when all this stuff is coming down. Right. So I'm gonna read you a couple of parts out of this. Good. It's like story time.
I know, it's like my favorite part of the day.
They decided to put together a group in which 7 or 8 prosecutors would act as a SWAT team for mortgage fraud cases, he says, and he asked me to run it. The job gave me an inside look at the burgeoning housing crisis and its causes. And the more I dug into the cases, the more I saw that the creation of the housing bubble and the explosion of the fraud were caused by the same thing: the Wall Street inspired ravaging of mortgage underwriting standards in order to generate more mortgages. Mm-hmm. Which in turn provided the Wall Street financial institutions with higher fees. Mm-hmm. So here's a guy whose job at this time, he was working in New York. He was working for the prosecutor's office. He's prosecuting fraud claims, and he assesses out the reason that all of this happened in 2007 and caused a collapse in 2008 was because of the Wall Street inspired mortgage underwriting standard changes so that they could generate more fees. It's not because people in their homes bought houses they couldn't afford. So then he goes on. As the real estate bubble was being inflated, some of the most basic aspects of good underwriting, verifying a borrower's employment and income, making sure that the borrower had enough income to cover his or her debts, making sure that the mortgage property was worth more than the loan, were thrown out the window, clearing the way for the rings of fraudsters who would execute complex schemes that netted billions of dollars in illicit proceeds. Not surprisingly, this decline in underwriting standards opened the doors wide to fraud. In our mortgage fraud group, I focused our efforts not on the individual borrowers, but on criminal rings typically made up of corrupt lawyers, mortgage brokers, notaries, loan officers, appraisers, and insiders at mortgage lenders. So here's a guy whose job it was. And he says, oh, you got to go after where the problem is. And the problem was these people created the whole cheating system. Unbelievable. One of the categories of cases involved predatory lending. In these, mortgage brokers and originators seeking to increase the fees, their fee income, lied to potential borrowers, such as about the amount of the required payment or the interest reset provisions, in order to trick them into taking a loan that they couldn't afford.
So that their payments would start out at one amount and then it was not clear. They did not know
Didn't even
that
tell them.
the payments were going to jump up. And so it's very, very, it's very wrong to accuse the victim in the situation.
Right. Because one type, he's going to go through three types. One was they just lied to borrowers. And they lied to borrowers sometimes who didn't have English as their primary language, which is really horrible. Well, some of the activities that we found in those investigations was immoral, but was impossible to prosecute. This is the kicker, because it had been endorsed by the banks and the regulators. So it wasn't technically illegal to do what they were doing. It was just immoral.
And this is where I go crazy when people talk about deregulation, all these. Let the market work everything out.
They're going to work
the
it
market,
out.
Yeah, they're going to work it out in favor of the people who have all the money and all the power, and not at the benefit of the common good.
So this book's called Bailout. He goes on and says, for example, the banks and other lenders formally agreed to pay brokers an extra multi-$1,000 bonus, euphemistically called a yield spread premium, if they were able to convince a borrower who qualified for a prime loan or a normal standard loan to take a more expensive and higher interest rate subprime loan. If they could convince them to do this other loan where you're in, then the broker made more money. And this was all called an incentive because, these bankers, they're really important. And if they're not compensated well, they're going to go find other work.
Yeah.
I mean, that's what we're always told about wealthy people, right? Is you got to keep the CEO, you've got to keep these people. They are extraordinary. They're not like anybody else. He goes on to write, in other words, the lenders were paying brokers to steer unsuspecting borrowers into more expensive loans that they had less of a chance of being able to repay. From the lender's perspective, the economics were simple. Because of higher interest rates and fees on subprime loans, they could resell them for a higher profit than they would earn on prime loans, and so were willing to pay brokers to generate more of them. The worst,
resell them like when the people defaulted?
No, here's the thing. These brokers who would buy these, you get a loan, and this happened to many people. They might know it. They're like, I bought a house or we refinanced, and then about 4 months later, my mortgage company sold my loan. I got this note that said, oh, now your loan is now being processed by this other company. So they created this is how they rolled these mortgages into what were called securities. So they took them from being a mortgage and redesignated them as a security, like it's a secure thing, like it's for sure, or AAA rated. So they were always going to be selling these loans, these subprime loans. And that was just the way. So the worse, he goes on to write, the worse the mortgage was for the borrower, the more profitable it was in the short term for everyone else.
Right.
The whole system was rigged.
Corrupt. Absolutely.
As for the regulators, he says, particularly the Federal Reserve, they had more or less abandoned any semblance of consumer protection during this time period and looked the other way at reported instances of predatory lending.
Now,
That's the guy whose job it was to oversee all of this. Like he worked for the government, and he's like,
now
the
I'm glad
whole
you're
thing
reminding
is
me of that
busted.
book because I read a review of it and I wanted to read it. I want to read it. It's going to take me a while. It's not easy reading for me.
Oh, it's
I
not?
was an English major. Like all those words. I don't know numbers and
I see.
stuff like that. It's a little tough for me. Financial stuff. I get lost pretty fast, but I have to train myself. But
I'd like to do a daily reading of sections from that book and just say to people, and the next time someone tells you, the system's fine, I'm sure it's all going to work out.
It came out very little in the election. I mean, it
wasn't even talked about.
It was not anywhere.
Well, and here's the thing. It's the guys who then then when they tried to fix this problem with the TARP, then the same people who created this system that caused the crisis moved from the banks into the Bush administration, then into the Obama administration. Timothy Geithner and Paulson, these other guys, they just roll in. And what's their big concern? The banks. Oh, the banks are everything because the markets and the banks. And I'll tell you, I mean, I'm not a socialist, communist, or anything else, but these people's unbridled commitment to what does it say about the market? What are investors going to do? It is really troubling.
It's a classic example of what so many of us have been saying for so long. When you let unchecked money, power go together without any kind of governance, it's just people tend to do the worst thing.
Well, and I would go even further to say the problem here is not just that it's unchecked power. The problem is the people that they've asked to oversee it and to regulate it are people who think that system is the most important. Yeah. They literally believed. I mean, Timothy Geithner, I don't think is a bad guy. Timothy Geithner believes
that's the right thing to do.
The crucial thing is to protect the banks.
Yeah.
And it's one of three crucial things. So what we've ended up with, this is my illustration, instead of having a three-legged stool that we're supposed to support this system, we've ended up with a pogo stick. So people are just bouncing on one of the three, and they're bouncing around trying to keep this thing balanced because, the only needed solution isn't to help people stay in their homes. And in fact, they incentivize the banks to do just the opposite of what the whole thing was supposed to do. So this is what drives me crazy because people will say like, well, see, there goes government again. Like you can't trust government. They can't fix it, or there's just too much power. It's not that. It's that there's not enough voices being heralded to make sure that the solution is fine.
Well,
it just drives me crazy because it's going to drive it hurts people's lives, which is
it's very disgusting. It's very disgusting.
So you know what we need? We need a write on.
We do. Is this the time for the write on?
That's an awkward transition, but yes. You know what we need? We need
But I had one more thing to say.
Okay.
Well, now I forgot it.
You did?
I heard write on and I got so excited and was like salivating like Pavlov's dog, and then I don't know what it was. Oh, I remember. You were talking about like who gets to be president and who doesn't get to be president, and you were concerned about Romney because of his history in the financial system. This is part of what you were talking about.
This is exactly what I was.
Where you put your main priority, your main focus. And I'm not clear on with the TARP money, like, could it have been better? I mean, I know what they said they wanted banks to do, but could they have forced their hand a little bit more with better?
Yes, they absolutely could have. Yes.
It's like just hand over. I mean, I thought that was really stupid, actually, to just hand over money to the people who created the problem and say, "Oh, now do the right thing with the money." So
yes, they absolutely, from what Neil Barofsky says, and it was his job to oversee this. They absolutely could have. They didn't want to.
Really?
And they changed
the government
statute.
Didn't want to.
I mean, particular people in the in the Treasury Department, did not follow through on the second and third parts of Congress's commitment
of saying you have to use this money this
way.
The
Troubled Asset Relief Program, TARP. The asset that was in trouble were people's home mortgages. Right. What they were supposed to do was to save those troubled assets. Right. What they did was they saved the bank's troubled assets.
They just handed over the money and
The asset that was in trouble that they didn't save are all these foreclosures, and they keep happening, and that's driving people's.
Yeah.
It's
Okay.
And then it, the idea that is still perpetuated all the time, which is, people bought houses they shouldn't have bought. That
people
was the
were greedy.
Yeah, that was all it was.
The people not speaking English, who had people translating and leaving out half the information,
unbelievable,
were greedy.
Well, stick with us here, Doug Pagitt Radio. We're going to be back here after a little audio break for the Right On.